Ask me when I'm going to sell it. Never. I'm not going to sell it ever. And so what do I expect to happen? I expect it will grow aggressively toward gold, and it will flip gold, and then it will demonetize gold and subsume gold. And probably it'll be first $10 trillion and gold is 10 trillion. Then it'll be 20 trillion and gold will be 5 trillion or 4. And gold will eventually become an ornamental metal. Bitcoin is going to suck the monetary energy off of negative yielding bonds. Tom, I ran a survey on my Twitter. I got 65,000 responses 2 days ago. I asked people, where'd the money come from used to buy Bitcoin? 49% is stocks, 20% is gold, 10% is bonds, 19% is property. Basically, stocks are going to be negative yielding if you're value stocks because they can't keep up with the rate of monetary expansion. Everybody knows bonds are destroyed. Ray Dalio just told the world they're all negative yielding. He thinks they're negative yielding versus CPI. The real point is they're negative yielding versus the cost of capital or the rate of the monetary supply expansion, which is like 15 to 25% a year. They're screaming value destroyers. So I think that Bitcoin goes to 10 trillion and it goes as fast as it can, and then it grows 50, 60% a year toward 100 trillion, and it slows down from 200 to 150 to 100 to 80 to 60 to 40. You know, you saw Google and Amazon growing at 20% a year off of large numbers consistently for the past 5 years. I think when it gets that big, it'll be growing 20% a year, and eventually it'll subsume the total addressable market for treasury assets, and then it will be growing at an organic rate, 5, 6, 7%, a fair cost of capital. Bitcoin is the world's best treasury asset. It's like 100x bigger than the next thing. The risk is 1,000 times less than the next thing. The addressable market is 100 times bigger than it is right now. It's its own thing. Everything else in the crypto universe is venture capital. If you have a venture capital portfolio, if you have the wherewithal to invest in crypto ventures and you want to study it, well, in my opinion, they have 100x less addressable market and they're 100 times more complicated. But if you want to do that and you have the capital to do it, have at it. If what you want to do is just buy a bar of digital gold and wait, I mean, Bitcoin is better gold than gold on a big tech network, right? It's just, you just buy a bunch and you wait. We've got two strategies. One is we run enterprise software and we make money and we love it. And we've been in the business for 30 years and our customers need us and we're good at it. It just happens that we're not growing 200% a year. Right? But there's no shame. By the way, are you going to disband your family? And none of those sports teams make money, but like, so why even like own a sports team? The answer is because you love it and it's a beautiful thing. And if it's not, no sports team grows 200% a year either, Tom. Right? So here's the real existential issue, right? If we get rid of everything on earth that isn't growing 200% or 100% a year, or it isn't growing faster than Google and Facebook, there's not much left in the world, right? We have two strategies. One is we're going to buy and hold Bitcoin, and that's a 200% digital asset network growing, and we love it, and we made a lot of money. We made $3 billion doing that in the past 6 months. But that gives us the ability to do the other thing we love, which is create great enterprise software and to continue to sell that and grow that. And just because the two businesses don't grow at the same rate doesn't mean we don't love them both. And there are a lot of synergies to actually having an operating company that has a P&L strategy tied into a balance sheet strategy. So we're going to keep doing them both. We're happy about it. It's a lot easier to do the enterprise software company when the stock is moving up and when every customer in the world knows who we are. It's helped our marketing. It's helped our customer relations. It's helped our employee relations. It's helped our recruiting. And so they're very synergistic.
Let's simulate somebody who's 62 years old. They've got a $500,000 portfolio to invest. What percentage of that portfolio would you put in Bitcoin versus equities versus any other alternatives that they might be considering as they're heading toward retirement? So they're looking at like, I'm not going to have maybe income after age 65, and I've got a $500,000 to $1 million portfolio. What percentage would you put in Bitcoin?
Tom, I think the single most important thing you can do is estimate the annual rate of money supply expansion every year for the next 8 years. And if you think if that's 15% going to 10, going to 5, going to 2, going to 0, then you're going to stick toward a traditional portfolio. But if you think that money supply expansion is going to be 15% consistent, then you got to go to scarce assets. bottom line is, I don't think bonds or real estate work as a store of value and in a monetary inflation environment, because they're both, one of them's a coupon and the other one's pegged to CPI or capped at CPI. You've basically got to invest in an index of equities that are going to grow, or you got to invest in scarce assets. And if the growth rate of the money supply is 15%, you better find a portfolio of equity that's going to grow 15% or better if you're going to store value in it. Otherwise, I would invest in trophy assets. Buy your house on the beach that you want to live in the rest of your life, because that'll always be valuable to you with leverage. I think you buy scarce digital, probably like Bitcoin. You buy things that are absolute. Buy something that a rich person is going to want to buy from you in a decade. Ask yourself that question. I'm not buying your New York municipal bonds yielding 2% in a decade, right? And you're going to get a negative 15% real yield. So I would think in terms of that: trophies, equities, and then scarce assets. And obviously I'm biased. I think Bitcoin is the best property in the world. Figure out what your risk tolerance is for it, buy that much of it, and then diversify the rest across other things you know and you're comfortable with. Yeah, if you'd asked me about Bitcoin in February of 2020, I would have said, what? I don't know, it's not for me, I don't get it. If you'd asked me what I thought about business in April of 2020, I would have said, this is just the scariest thing I've ever seen in my career. Main Street shut down and Wall Street's already recovered, and the K-shaped recovery. It's just very odd. By the time we got to the second quarter, what we knew was this: our revenue wasn't going away. Our business value proposition was better than ever. We were going to generate 4 times as much cash flow because all of our marketing, sales, and services activities dematerialized. Travel and expenses dropped by 98%, and we started Zooming everywhere. We started uploading videos to websites. So we had all this cash coming. We had a block of half $500 million of cash sitting there, and we got dragged into macroeconomics, and we realized that it was worthless, and the investors didn't value it. And so we had a problem. We started looking for a solution. And I would say, Tom, the paradigm shift here is twofold. The first paradigm shift is, for the first time in 30 years, people in the Western world are living in environments where the currency is weakening more than 7% a year. It's weakening at 15 to 20% a year. That's the first paradigm shift, because that changes how you discount bonds, how you discount value stocks, how you discount commercial real estate, and you got to think different. And the second paradigm shift is, Bitcoin's the first digital monetary network in the history of the human race. We never in 5,000 years could make money work on a computer network. And it wasn't clear it was going to work when it was $1 billion. But by the time we got to June, it was $200 billion. And, you guys follow digital networks: Facebook, Amazon, Apple, Google. Every good idea for the past decade has been a digital network. And when they get to 200 billion in market cap, they're pretty hard to stop.